Hey everyone, it's Julie here with TipRanks, and today we're taking a look at two strong buy cybersecurity stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two big names in the cybersecurity industry. That is CyberArk and Palo Alto Networks. Both of these companies come in with a strong buy consensus from Wall Street. So today we're going to compare the two, what it is that these companies do, how they've been performing lately, and exactly what those analysts are predicting for the stock's future. You can check out both of these stocks over on the TipRanks website or on the TipRanks mobile app by following the links down below. And if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Let's dive right into our comparison of these two strong buy cybersecurity stocks. We're going to start off taking a look at how these stocks have performed over the past year, kicking things off with CyberArk Security. They trade under the ticker CYBR, currently priced at $316.45. In the past year, this stock has gained 58% and is up 19% in the last 3 months. They do currently score a 10 out of 10 on the TipRanks Smart Score, with increased hedge fund activity, positive crowd wisdom, and very bullish new sentiment. Palo Alto Networks has also seen some solid growth in this past year. But at the start of 2024, they did have a big drop off here in February. So over the past year, they've just gained 31%, while in the last 3 months are up over 15%. They do score an 8 out of 10 on the TipRanks Smart Score, but they have seen a slight decrease in hedge fund holdings and insiders selling off some shares. Taking a look at what the companies do, CyberArk Security specializes in Privileged Access Management, or PAM. This means they provide a platform to securely store, manage, and control access to highly sensitive accounts and credentials used by system administrators and other privileged users within an organization. Essentially, they're acting as a central vault for sensitive passwords and access keys across an enterprise. They seamlessly secure identities throughout the cycle of accessing any resource across any infrastructure, including hybrid, SaaS, and multi-cloud. Then we have Palo Alto Networks, who has a bit of a broader portfolio, offering a comprehensive network security platform. They're primarily known for their next-generation firewall technology designed to protect organizations from advanced cyber threats by monitoring, analyzing, and preventing them in real time, with a focus on application identification and control, all powered by their artificial intelligence and built around a zero-trust security model. They essentially act as a digital security partner for businesses to safeguard their digital infrastructure and data. Both companies did share their latest quarterly earnings report in mid-November, starting with CyberArk Security, who came out on November 13th with an earnings and revenue beat and guidance that exceeded expectations. They saw a huge Q3 earnings beat of 94 cents, coming in 48 cents ahead of analyst expectations. Revenue came in at $240 million, growing 25% year over year and beating expectations by $6 million. They also saw their total annual recurring revenue grow 31% year over year to $926 million. They said that they reported strong results and outperformed guidance across all metrics, and their best-in-class execution helped them deliver strong net new ARR, record revenue, and increased profitability and cash flow. They noted that they did close the acquisition of Vanafi on October 1st, which helped extend their platform leadership and set a new standard for end-to-end machine identity security. CyberArk also shared outlooks for their fourth quarter and full fiscal year, with fourth quarter revenue expected to be between $297 to $303 million, which was ahead of analyst consensus of $283 million, and the full year revenue expected to be between $983 and $989 million, which would represent growth of 31 to 32% compared to the prior year. Then we have Palo Alto Networks, who shared their results on November 20th. They came out with a Q1 beat and raise and also announced a stock split. For their first quarter, they reported earnings per share of $1.56, beating analyst estimates by 8 cents per share, and revenue came out at $2.14 billion, growing about 14% year over year and beating by $20 million. They saw their next-gen security annual recurring revenue grow 40% year over year to $4.5 billion. Management said that they see a growing market realization that platformization is the game changer that will solve security and enable better AI outcomes, and they expect this will be a multi-year trend for which they are best positioned to deliver to their customers. As a result, they are raising their NGS ARR, revenue, and non-GAAP earnings per share guidance for the year. On top of that, the company also announced a 2-for-1 stock split that'll be effective December 16th. And looking at that future guidance, they are anticipating similar growth as CrowdStrike. For fiscal 2025, they're anticipating next-gen security ARR of $5.52 to $5.57 billion, which would represent growth of 31 to 32% year over year. Now, when it comes to how Wall Street feels about these two stocks, we have dozens of ratings to look at when it comes to each. And we recently had a 5-star analyst from Wells Fargo reiterate a buy rating on both stocks. Starting off with CyberArk, he mentioned the company's recent strong third-quarter results and the recent acquisition of Venafi, expected to bolster the company's annual recurring revenue growth in the low 20s range and maintain a healthy free cash flow margin, both of which are above the Rule of 40, indicating robust performance metrics. And the same analyst was also impressed with Palo Alto Networks' recent strong quarter. He was impressed by their significant growth in key financial metrics such as their ARR, RPO, and free cash flow, and that management's optimistic outlook for the year, supported by strategic deals like the one with IBM and increasing traction in areas such as Secure Access Service Edge, further bolsters confidence in the company's growth trajectory. Looking back at CyberArk, they also had an analyst from Bank of America recently increase their price target, saying that they had another strong quarter of outperformance. While contending that the stock is priced for perfection, the firm continues to have conviction in CyberArk's ability to consistently deliver strong results and adjusted their estimates to reflect the updated outlook from management. And to keep things even, of course, we'll look at a price increase for Palo Alto Networks, a recent one coming from BMO Capital. They said the company continues to execute well as more customers consolidate on its platforms, and while some billings results were weak, the underlying demand trends remain stable. Their QRadar's installed base also represents a compelling conversion opportunity for the Palo Alto Networks over time. Looking at the overall analyst consensus on both stocks, they do each come in as a strong buy, but the breakdown of those ratings do differ. Looking at CyberArk Security, they currently have 27 analyst ratings, coming in as a strong buy based on 26 buys and just one hold. The average price target comes in just shy of $350 per share, implying an upside potential of 10.75% from current prices. Looking at those ratings down below, our hold rating here is fairly recent, and they did bump up their price target to $316, but that would be a very slight downside from current prices. Our high-end price target is $400 here and is the most recent, just a couple of days ago, and implies an upside potential of 26%. Then we have Palo Alto Networks, who has 36 current analyst ratings and does come in as a strong buy, but with a few more differing opinions, breaking down to 31 buys, 4 holds, and 1 sell. Their average price target comes in at $424, implying an upside potential of 8.3%. Looking at those ratings down below, no surprise that the sell rating is our biggest downside. They recently decreased their price target to $291, implying a downside of over 25%, while our high-end price target comes in at $464 for an upside potential of 18.5%. So that is a quick comparison between CyberArk Platforms and Palo Alto Networks, both coming in as a strong buy, but CyberArk might have the edge here with a slightly higher upside potential and no sell ratings. We have a lot more consensus on the buy. But let me know your thoughts in the comments down below on which of these cyber companies catches your eye the most. I always appreciate hearing from you guys. I just realized I might have called it CyberArk Security earlier in the video, so excuse my blunder of words there. Always keep in mind these videos are never a suggestion to buy or sell any specific stock, just meant to share what Wall Street's looking at, so please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.